In the early 90s, I was at a barbecue cum party. My host had some rather novel placemats. These were the days when companies issued share certificates, and what he'd done was empty the filing cabinet of his now worthless holdings and got them laminated. He got the idea from someone at work, an ever-present reminder of his folly. He need not have felt guilty. There is a good bet everyone else in attendance that afternoon had a similar stash of dark mementos. A whole generation of Kiwis, now dubbed boomers, have memories of those days when their investments vanished before their eyes, like a sandcastle on a beach. The first tide came in on Tuesday the 20th of October 1987. 1 in 7 Kiwis had money in the market that day. A time when the share market was spoken about in the same vein as the latest episode of Coronation Street or Who Made the Team. Everyone with a tenner to spare was in. Investors largely didn't bother doing their own research and diligence on the companies they were putting their money into. They took the word of more learned people, financial gurus, the bloke at work or at the pub with a tip. History will later show that that tip was likely to be on par with the one you got from your local share broker. Better not miss out. In those heady days, mums and dads had 309 companies to plonk money into. Today, there's 181. It is a given the market crash in New Zealand correlated to the fall seen on Wall Street. 22% down in one day. The London FTSE wasn't quite as bad. They took 2 days to lose 22%. Comparatively, New Zealand's day one loss of 15% didn't look too bad. The issue with New Zealand was the market kept falling whilst others plateaued and recovered. 3 months after Black Tuesday, the New Zealand market was now down 60%. There was no cat to bounce. New Zealand was top of the global equities boom and became bottom of the league in short fashion when the crash occurred. It took decades to recover. Investors weren't that stupid to know that markets did go down. They had already seen the gloss go off some of the golden boys like Judge Corporation earlier in 1987. Shares in Judge were at one point trading at $9.20. The day of the Tuesday crash, as you'll see shortly, they were down to $3.85. On the 19th of May 1987, this had happened. The clear portent was shrugged away by the experts as being a correction. So, who were the placemat companies that crashed and burned and sent a whole generation into bricks and mortar? I'm going to focus just on the ones who bolstered their credentials by sticking a reference to them being a corporation of some sort. Whether or not they actually were, it didn't seem to stop them. These were Omnicorp, Technicorp, Capcorp, Epicorp, RankCorp. I'll keep them coming. Aiden Corp, Chase Corp, Gold Corp, Troy Corp, Petro Corp. We are far from being corped out. XS Corp, Main Corp, Judge Corp, Bridge Corp, Corporate Investments. In case you thought I'd forgotten, South Corp, Grow Corp, Equity Corp, Renoof Corporation, Power Corp. And I'm still not finished. Energy Corp, Excel Corp, FiNgZ Corp. Dizzy by now? Within this group of corps, let's now put the microscope, come blowtorch, on some of the bigger names of the day. Let's see where they were at on the 20th of October and then a year later. Starting with Chase Corp. In 1985, they were being dubbed the darlings of Queen Street by a sycophantic media more interested in getting on the invite list than doing the financials. They had a market cap of 3.6 billion and were the third largest company in the market in 1987, with a global investment portfolio largely tied to real estate. When commercial property fell, so did their fortunes, petering out to a whimpering death in July 1989. 2 years earlier, their shares were trading at $7.20. Next, let's examine Renoof Corporation. In 1986, their shares were trading in the sevens. In the year 87-88, they were losing over $1 million a day, when $1 million was worth a lot more than it is today. Declared the second largest annual loss ever at the time. Francis Renoof is in the New Zealand Business Hall of Fame. Come on to the stage, Equity Corp. Collapsed in 1989 and took with it 150 other interrelated companies. Equity Corp's shareholders, all 5,400 of them, had to wait to 2010 to see some of their investments back. Sadly for many, that was too late. Death had intervened. Most shareholders did get to see Alan Hawkins, executive chairman, and he's the one who's in the picture right now, sentenced to 6 years jail for stealing $88 million from the company. Second to last, we have Judge Corp. I've already touched on their freefall. As you can see, it didn't get any better for them. Became a perennial penny dreadful until they finally went tits up in 1998 with debts of $350 million. Last but not least, we have Gold Corp. Issued shareholders a certificate which corresponded with solid gold held in a company vault. Makes coughing sound. When the market plunged, the Gold Corp investors thought they'd made a wise decision, as gold rocketed up in price 25% that year. They were in for a lasty surprise though, when they tried to withdraw their bullion. In short, they discovered there wasn't enough gold to go round. In a game of musical chairs, also involving the N.Z, they got a pittance of their money back. Founder Ray Smith, the one who's in the picture right now, did face charges, but he got acquitted. By this point, I'm sure you're thinking, surely the share brokers around at the time, there's not many of those left by the way, could have cautioned punters. Here is an example of their expertise. In February 1987, Brokers Buttle Wilson issued their 5 recommended picks for the year. At the top were Chase Corp and Equity Corp. You already know what happened to them. Had you taken their advice on Chase, within 3 years your entire investment would have gone down the gurgler. The other 3 companies Buttle Wilson suggested were a chimp with a dartboard could have done better. The headliner, Share Advice publication, which is now online, had this to say about Equity Corp just 6 weeks before the market collapsed. Recommendation: Equity Corp has broken out on the upside and re-rating in line with the market. However, its prospective PE of only 8.5 based on share price of $4.70 appears modest considering the improvement in the quality of earnings and a clearer management structure. Buy before the 4th of September 87 when the shares are X the 1 to 3 bonus. Clearer management structure. Were they the ones that ended up being prosecuted? Buy. 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 People lost their entire savings as a result of this sort of stuff. What about there we have it. Blood everywhere. Casualties aplenty. Share club mums. The mate who got a tip from someone at work in the know. First time investors. Those who took out a bank loan at 20%. They lost the most. Swore off shares and went into rentals. You want to know why we have a housing crisis in 2021? Go back to the excesses of 1987. I wish to close with a little admission. When Judge Corp were at 7 cents, I invested $100. Aware it was a long shot punt of Phoenix proportions, in the faint hope it would somehow regain their one-time glory. You all know what happened. I've already told you. My certificate? It will be at the rubbish tip. Hey, thanks for tuning in. Like, subscribe, share as in shares. Chase, by the way, is a shoo-in. And I'll see you next time. Bye for now.